Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video. Greetings everybody. Today guys, we again will return back to discussion of the euro currency, because although the Japanese yen and Australian dollar looks really interesting and intriguing in the long-term perspective, and in general our analysis as on the Japanese yen and an Australian dollar still valid. In fact, Australian dollar has dived even deeper in the resold range and right now stands very close to the short-term target. But in the short-term perspective, right now, is nothing that could be done there, since market extremely overbought on the Japanese yen and oversold in Australian dollar, and we have estimated the targets that market should reach. So the progress is still, the situation is still valid, analysis is still valid, and these currencies stand on progress with our assumption. So I think that probably something could appear for the short-term trading after the FOMC meeting on the next week. Until this moment, the market will use and utilize the rumor concerning the possible more hawkish rhetoric, more hawkish policy from the Federal Reserve, and under this rumors, market probably will continue the action in the nearest future. Today is Friday, so it's hardly something will change drastically till the FOMC meeting. That's why today we will take a look at the euro currency, because oppositely to these currencies that we have mentioned, the euro currency stands very tight and flat. As you can see, the whole week market stands in the tight range. And today there are some new moments that could be discussed here. I recall that a couple of days ago we said that market really could show some bounce up, because in fact market could do this. This is in fact the last point where market could do this in the short-term period. Market either will do this or it will just continue move to the next target, because market has no other targets below these lows that could hold market from the plunge down. And this is the only reason, and the foundation for the possible bounce. The ABCD target is 1618 extension and daily oversold. If market will fail and here and will not show any bounce up, then the only direction will be to the downside and to the next target that we have specified in our weekly research. And today some new moments have appeared here that we need to discuss. First of all, guys, today the day where Euro Union will launch the new sanctions against Russia, and that probably will be treated as the negative sign for the European economy by the investors, and that also could press on the euro currency. At the same time, we have purely technical moments that point on possible further euro currency weakness. So if you'll take a look at the 4-hour time frame chart, we see that market has formed the bearish pennant that accompanied by the bearish dynamic pressure, because as you can see, market has shift trend bullish here, but market simultaneously creates the lower highs and the market in fact stands flat. That's very typical action when the market forms the dynamic pressure inside of the long-term trend. And take the pause, trend shift bullish, but market stands flat, and after that some plunge down will follow. The short-term target for this plunge, maybe it will be reached even today, who knows, is based on the classical approach to the trading on a pennant pattern, is that the breakout probably could pass the distance that equals to the mast of the flag or pennant. So, and the mast here is this action that was before pennant has appeared, has been created. So if we will count this distance, clone it, drag it to this area and drop here, you will get the target. It's approximately 127.65 area. That's the short-term target, and probably market will reach it. Simultaneously on the hourly chart, so if you take a look at the hourly chart, here is our head and shoulders pattern that we have discussed previously, and market really has made the truth challenge and truth attempt to continue move high and to create these head and shoulders. And maybe guys, you were in have made some money on this action, but take a look, market has failed to pass through the neckline, and currently this right shoulder looks too overextended to the right in terms of time. This is too much time compared to the left shoulder. In general, this price action in the market reached the neckline, bounced down, shows this some suspicious action. This absolutely doesn't look bullish, and probably it means that market has failed to pass through this neckline, and we probably should be ready for the failure of the head and shoulders. So that action does not look like the final victory of the bulls in the short-term perspective. We do not see any capitulation of the bears. Instead of that, we see that market has failed to break to the neckline, returns right back down, and shows some calling, very some messy action in the middle of the right shoulder. So it means that this challenge and this attempt to create a head and shoulders pattern probably will fail. Simultaneously, market could create this butterfly, and the downward action, the breakout for the pennant from the pennant pattern could take the shape of the butterfly. The target of the butterfly stands a bit closer to the current price action, so it stands approximately 127.95, the 30 pips higher than the target of the pennant, but it's really not a big deal whether it will be the butterfly or you will rely on the pennant pattern. The core of this current situation is that recent price action suggests that with a high probability the further downward continuation in the nearest future. Whether it will happen after the FOMC meeting or not, but personally I think that it really could happen even today when the sanctions will be started. I think that we will see the downward action even prior to the FOMC meeting. But anyway, the core, the idea that I would like to share with you is that if you have taken the position with the hope that market will show this bounce up and this head and shoulders that we have announced, it's better to close it because current action absolutely doesn't support the perspective of the possible upward breakout. So maybe you even have made some money on this retracement up, but current situation has changed and it's better to stay flat, or maybe even think about taking the scalp short position with the target around either here based on the butterfly or maybe even based on this pennant breakout. So that's our current view on the euro currency. Let's see what will happen soon.